Welcome back to our channel here at Helper Realty. We're going through what types of loans a brand new buyer in 2025 are going to be looking at possibly to save them money. Let's dive right into it. All right, so in 2025, you're probably looking at interest rates going to be fluctuated a little bit up and down as well, just like 24. So right this minute in my area, you can get a 6 to a 6.5 interest rate for a mortgage on a fixed rate for 30 years. That's about normal. Can you go lower? Is it going to be, could be higher? Absolutely, depends on your credit. So what are these loan types that everybody talks about? If you're a new buyer, I'm sure it's confusing. And why are there so many? So weird. But you have USDA, FHA, VA, and some even NC housing money that you'll hear about. But the basics are this: USDA is 100% loan with no payment, no down payment, and is usually only in county locations. So in city homes will most likely not be eligible for USDA. You can check eligibility right on their website, on the eligibility website. I'll put it right here on the screen. You don't have to be a realtor or a lender. Just punch in an address. It'll tell you if it's eligible for USDA or not. You have to qualify for USDA, so you can actually make too much money income-wise to qualify for USDA. But talk to your lender and see if you can. What is VA? VA, of course, is Veterans Affairs. That is only for veterans, obviously. That is also 100% loan, no down payment, no PMI. We'll get into PMI in a minute. What is FHA? FHA is it's backed by Federal Housing Administration. They do go lower on scores, usually a 580 on paper. Real life is probably about a 620, as low as you can go. What is conventional? If you hear that word, conventional lending. Conventional is not insured by the feds, of course. Private lender that gives you a mortgage. Usually on paper, again, they go to 620 on paper. Realistically, it's about a 640. It's the lowest they can go. Conventional, in my opinion, is the cheapest for the long term. You'll have different opinions on that depending on the lender that you choose. But let's look at payment types and what the differences are on those different loans. Let's just say conventional. Let's go FHA first. You got 3.5% down payment, where most conventional loans require 5% down. So the lending amount of those two different situations are going to make your payment lower. So let's just say you're buying a $300,000 house at 5.9. Okay. For an example, you're going to pay about $1,717 on FHA monthly before taxes and insurance and PMI, the dreaded PMI, right? So on conventional, you're going to the same exact house, same payment. It's going to be about $1,690 on a payment before taxes and insurance and PMI. Not a huge difference there, but all that is less lended versus more lended on the FHA. So what about if you get a 6.9 interest rate instead of that $1,690 payment on conventional and a 5.9 interest rate? You would be about $1,877 on the 6.9 interest rate. So the interest rate does make a difference. I don't want to let anybody think that, oh, it don't matter if they're going to give me a 7.5. It does matter. It matters by a couple $100 in today's market. So that's just with a 1% difference in interest rate, and it's $187 difference on the payment. What is all this stuff added to your payment? All right, you got principal and interest, right? P&I. What is all the other stuff? What is the T&I? All right, that's taxes and insurance. All right, so taxes, property taxes. Okay, everybody knows you got to pay property taxes. And then you got property insurance. Insurance company, usually they can vary. So what is PMI? Like, you've heard about it. Let's dive into it. Private mortgage insurance, and unless your lender doesn't require it, but most do, it'll be tacked onto your payment. Think of it as an insurance policy for your lender in case you don't pay your mortgage bills and they have to foreclose on you. It's a protection for them, the lender, not you. Okay. The only way not to have private mortgage insurance tacked onto your payment, again, is to put 20% down when you purchase, 20% of the purchase price as a down payment. Also, most loans do allow the PMI to come off of the monthly payments once you reach 80%. So in other words, if you pay down 20%, a lot of the loan types, mainly conventional, the PMI will come completely off. FHA actually stays on. It reduces, but it stays on the life of the loan. So how much is the dreaded PMI? This is one of the questions that even realtors don't even know, a lot of them anyway. And there's formulas, you know, it depends on credit, it depends on down payment. So there is no specific answer unless that person has your financials, okay? So the answer is, it depends. Same exact example, $300,000 house, you could be $96 PMI all the way to $356 a month on PMI, private mortgage insurance, to the same house. So it just depends. That's the answer. You know, it depends on your credit. The higher the credit, the lower the PMI. The more down payment, the lower the PMI. Okay. The biggest thing that I would say a brand new buyer needs to do is get their credit checked ASAP. Get an experienced lender to check it, because it's going to be different. Your score is going to be different than like if you go to Credit Karma, or if you're like me and you got a membership to like Experian. It's different. I can get my credit score checked at my bank, and it's different than what I'm paying for. The main thing on getting your credit check is you might have a $20 or $50 item that's negative on your credit that you can get taken off, boosting your credit score once that negative issue is resolved. So you don't know what's on there until the bank actually pulls it. Now let's talk about down payment. All right, down payment has to be sourced for at least 2 months in your bank account. It can't be mattress money, as they call it. So if you've got 20 grand sitting in a hole in the backyard, they're not going to be able to actually source it. So get it in a bank. Get it in a bank before you actually go, to get a pre-qualification from a lender. The down payment topic has got to be the biggest undervalued topic in real estate. It's very hard to save down payment. I understand that. As large as you need for purchase prices today, yes, that is true. It is very difficult, but it is important, and it comes in second in importance only to your credit score. So don't go in with a minimum attitude on this down payment issue. I always recommend getting pre-approved for a mortgage before you start looking. Does everybody do that? No, but it's important, because you don't really know what you can buy, so you don't know what to look for. If you can qualify for a 300, there's no sense in looking for a 500. You're not going to be able to afford it. You're not going to be able to get the loan, so you're kind of wasting your time. Additionally, consider setting aside an emergency fund also for unexpected expenses that may arise, after you purchase your home. So I recommend actually not to spend every dollar that you've got putting down payment. So if you've got, 3.5%, you talk to a lender, I've got my 3.5%, and that's all you've got, you probably need to save a little bit more time. Click the next video to see what NAR, the National Association of Realtors, has changed to make you maybe have to pay your buyer's agent a commission. Thanks for watching.